Let's talk about fixed overhead for a moment. Now, this section of the software is where you're going to enter all of those expenses that deal with your day-to-day, how, what it costs you to open your doors. Now, there are two different overhead categories. The first of those is our fixed overhead, which we're dealing with specifically in this tutorial. The other is the variable overhead. Now, we'll deal with how to enter that in a later tutorial, but for purposes here, we do need to take a moment and just explain what are the differences between the two. Now, by definition, fixed overhead are those expenses that are not tied to productivity. In other words, they're not tied to sending a technician out in the field. Variable overhead, on the other hand, is directly tied to productivity. And if you get the entry wrong, it'll start to impact your cash flow projections going forward. So how do I know if it's fixed or variable? Well, it's actually fairly simple. Ask yourself this question. If I choose not to send one of my technicians out to the field today, instead I'm going to have them clean the shop, do I still incur and have to pay that expense? Right? So let's say, for example, your utility bill. Now, the dollar amount each month goes up and down based on the weather. That's got nothing to do with whether it's fixed or variable. Answer the question. So if I have John, one of my service technicians, they're going to come and work in the shop, clean the shop today. They're not going to run service calls. Do I still have to pay the utility bill? Yes. And if the answer to that question is yes, it's always going to be a fixed expense. If it were no, it'd be a variable expense. So for example, let's take fuel in your trucks. If I'm not going to have John run any service calls today, he's going to come in and clean the shop. Do I still have to put fuel in the trucks? Well, no, he's not burning any fuel. We don't incur any more expense there. Now, I know that some of you say, well, yeah, but I have my technicians take their truck home. They still got to get to the shop in the morning. Well, technically, that piece to and from work would be a fixed expense. All the fuel they're burning, the majority of it during the day running service calls, would then be a variable expense. Now, for ease, again, the way we always handle that is all fuel, because the vast majority of it is variable, goes into the variable category. So if the expense is directly tied to productivity, you're going to enter that in variable expense, and we'll cover that in the tutorial for that section. So fixed expenses, let's talk about this. These are all the costs for just opening the doors each day. And if we look at our entry screen, we've got a number of different categories here, right? And I'll just kind of make this a little bit bigger so it's a little bit easier for you to see. So we start out with the first one is the description. What is it? This is what you're going to enter in to describe that expense category. It'd be the name right off of your profit loss statement. If you use general ledger numbers, I encourage you to start out your description with that general ledger number. It will then sort this, or give you the ability to sort it based on that GL number. It just simply makes it a little bit easier. Otherwise, it's basically going to, at best, put it in alphabetical order, which may or may not make sense for you. Next item over is the method for that. And so when do we pay this expense? If we pay it monthly, that'll be monthly. Is it semi-annually? Is it annually? Quarterly? How are we actually making that payment? Is there. Next one is the cost. So how much for that method, if it was monthly, right? In this case, it's $2,500 a month that we're paying for that particular expense. You'll notice some of these show up as zeros. That'll make a little bit more sense here in a few minutes. Next one over is the annual amount. So even if I put in that I'm paying this expense monthly and it's $344 a month, well, the annual total is $4,128. Just simply adds it up for you. And then over here on the actions item, that's the last item. Anytime you see those three dots, it means I can do a little bit more. We'll jump into that one in a few minutes. So if I want to enter in a new expense, I'm going to start out simply by clicking on the Add Fixed Overhead button in the upper right. When I do that, it's going to open up the Fixed Overhead entry screen. And I'll just kind of walk down these here for a moment, so just so I can cover each one individually. So the first one is that description. What is this particular item? Again, if you use general ledger numbers, I encourage you to put them in here as your leading detail. Otherwise, the item itself. So we're entering in advertising. Next item down, and again, just hitting your tab key bounces you from one field to the next. The next one is the method to apply this cost. Now, again, your options, it's a drop-down arrow. You're going to choose monthly, which means I make this payment every single month, quarterly, semi-annual, annual, and then manual. Now, I want to caution you because some individuals will just say annual and then they'll put the entire annual amount in this expense instead of going through the work of putting it in monthly. You don't want to do that because what happens then is it makes the entire year's worth of that expense show up in January in your cash flow budget. Then when you look at your reports, it shows that January was this massive loss, and then you spend the rest of the year digging out of it, right? So if you're actually paying it monthly, use monthly, right? So in this case, I'm saying it is a monthly expense. Next one, cost starts in. What month does this cost actually start into? If we pay it all year long, well, it starts in January. If we have a quarterly payment, let's say we pay the first one in February, well, then it starts in February, and it will start to post your payments that way. In our case, it's January. Next one down is the monthly amount. All right, so my advertising costs are $1,500 a month. Now, you notice that as I entered in the $1,500 a month here, the software automatically then filled in and put $1,500 per month every single month of the year. Now, remember, if I said that my payments were quarterly, well, then it's every quarter. You can see it actually puts the $1,500 in each individual quarter. So it just makes that entry a little bit easier for you. I'm going to go back to monthly in my particular case. Next one down, the expense category. Now, there are a number of different expense categories in here that you can kind of tie this expense to. This does not have to be used at this point in time. The goal of that is in a future release, we'll actually update this. So we'll be able to tell you what percentage of your total expenses apply to advertising or bank costs or your building or credit card, whatever. So it's something that we're looking to add into the software into the future. It's not there quite yet. If you choose, you can leave that one blank. Comments. Comments, just like everywhere else in the software, is purely for your reference. You don't have to use it. It's there just to maybe remind you of what's going into this category or any other note that you want to put in there. From there, I go into the fixed overhead allocation section. Now, in this area of the software, we can now start to utilize and leverage some of the work you've already done in the previous categories, like people and equipment, to actually make coming up with your percentages much easier. So we did this because we know that if we ask you, okay, now split those advertising expenses across these departments, many times what ends up happening is it's just, let's split it a third, a third, a third. Well, if that's not accurate, then we end up having one department subsidizing the cost for another department, and all of your data is really garbage, right? So we want to make it as accurate as we can. And so what we've done here is we've given you the option to choose a allocation method. There's several different allocation methods, and I'm going to skip manual for a moment. The first one is all employees. Now, if you choose all employees, what it's going to do is, you notice it's already filled in numbers for you. Well, back when you entered in your labor, you told the software where, what percentage of time these individuals are spending supporting each individual department. Well, the software simply goes back there and looks at that, crunches the numbers for your entire team, and says, hey, 33% of your total labor is supporting service, 37% is supporting installation, 30% is supporting your replacement department. So it automatically puts in those numbers very accurately based on where you told the software the individual people were spending their time. So expenses for all employees would be things that would apply to everybody in the company, right? So maybe it's health insurance and everybody has that. Maybe it's your 401k. Maybe it is if everybody in the company wears uniforms. Well, okay, I could choose all employees. It will automatically spread that cost amongst my departments based on where the people are spending their time. Any expenses that apply to everybody in your company. The next one down would be all field labor. Now, when I choose all field labor, now it doesn't look at the indirect labor. It only looks at where your field employees are spending their time. Right, so I kind of just, it narrows that list down a little bit. And so this would be used for things that only apply to your field labor. So let's say, for example, in your company, if the field guys all wear uniforms, right, but the office staff doesn't, well, that uniform expense then should be tied to field labor. Things like cell phones and tablets, right? Who carries those people? Well, if the field guys are all given a company supplied cell phone to operate in the field, well, that would be an expense that we would apply to all field labor. So anything that applies to just the field team would be applied to all field labor. Next one down, equipment. Now, when I choose equipment, it kind of does the same thing, but instead of looking at people, it looks at your trucks. And so, again, in this case, it's going to go back to your equipment section and all those trucks that you entered. If you remember, there's that checkbox in there that says, it's a field burning piece of equipment. If that's checked, it's allocating, it's looking at that piece and using it to come up with these percentages. So you told the software where each individual truck is spending its time. We're simply saying 58%, in my case, of all my trucks are supporting service. 26% of my trucks are installation, 16% are replacement. And it simply fills those in for you. Next would be sales. And if you remember back when you went through your new company setup wizard, we asked you for each department roughly what were the total sales or total revenues in each department as you created your departments. This is where it's using that information. So roughly 22% of all of your sales are in service, 49% in installation, 29% replacement, and it will fill those allocations in. You won't use this one that often, right? I'll use this for any general items. Maybe it's general business training. Maybe it's your attorney's fees or bank charges, things like that that are more neutral. Maybe you have a loan that's just a general business loan that could be allocated this way, right? More often than not, I want to use one of the other methods if I can. All right, this one's a lot more generic. And then the last item on that list is building square footage. This would be used for anything building related. So things like, again, the rent or the mortgage on the building, maintenance on the building, property taxes, maybe trash fees, utilities, right? The utilities are there really to support the building, cleaning fees, right? Things like that for the building itself. And again, if you remember when you went through your new company setup wizard, as you set up each department, we also asked you roughly how many square feet in your building or buildings does this department occupy? It's using those numbers to come up with these percentages. So 24% of my square footage is in service, 38% of my square footage is supporting there for installation, and 38% for replacement. Now, the last item that is there that I didn't cover is manual. Now, manual simply zeroes them all out and gives you the ability that, hey, one of those others really don't fit this expense properly, right? And in my case, I'm doing advertising. Well, none of those really fit advertising because my advertising expenses in my company really don't support my new construction installs. The advertising we're doing is really there for service and my replacement add-on replacement type business. And so by using manual, I can now come in here and say, okay, these expenses are, maybe it's 60% in the service department and 40% for my replacement type business that's there. I can manually enter in that expense and we are good to go. All right, so choose one of those allocation methods that makes sense for you in there. And when you're done with that, you'll simply go ahead and accept this particular expense. Now, once I accept it, again, we come back to our list. I can now see that advertising is showing up on my list. And as we look at that, it's a monthly expense. It's $1,500 a month, $18,000 total dollars per year. Now, a couple of other little items with regard to fixed expenses. Again, remember those action items. Anytime you see those three dots, it means there's a little bit more we can do with that item. If I simply click on those three dots, I can see my three options that are there are, first off, I can edit that particular item, right? So maybe I want to make a change to it. I could go ahead and choose edit. It'll bring that entry screen back up and I can change anything that I want. Next one is delete. So maybe I entered something wrong or I made a mistake with it and I just want to get rid of that entire line item altogether. I can delete it and start it over. And then the last one is copy. So let's say I have two expenses that are very similar to each other. I could simply copy it, give it a new name, and at that point, just make the one or two changes that I want or need to in that item. So that's where those three items work. Now, let's cover one more with the fixed expenses as we're doing our manual entry. And so I'm going to go in and I'm going to edit this item. Now, if you notice, we've got this big blue box up here, change to a variable cost. Let's say we were entering this and we realized somewhere along the way, hey, goofed up, right? This should have been a variable expense, not a fixed expense. What I can do is I can come in here and just simply choose, change this to a variable expense. It's going to pop up and say, hey, are you sure you won't be able to revert that? When I say you won't be able to revert it, it simply means, yeah, hey, you can't just do an undo, right? It's going to move this expense over to the variable expense side of our company. And so in this particular case, I'm going to say, yes, I wanted that to be a variable expense. It tells me, hey, the cost has been changed successfully, right? And now at this point, when I get out of that item, right, and I refresh my screen, what'll end up happening is you'll notice that that expense is here. It's eventually going to drop off, but it also will eventually move it over to the variable side of my business. And so it's just an easy way, if you entered it wrong, not to have to go back and re-enter all that data while you're doing it. So that's how we enter fixed expenses into the tool if we're entering everything manually. Now, if you have the QuickBooks integration enabled on your model, the process is actually easier, right? So all the fields, all the description I just gave you is exactly the same. But let's switch over to a company or a model where we have that integration already in place, right? It's fixed. I've already got my equipment. I've got my labor entered in this particular model, and I'm going to start entering my fixed overhead expenses. The process with the QuickBooks Online integration is actually simpler. And so if I'm going to enter in a new expense, I'm simply going to, again, go over here, click on Add a Fixed Expense to my model itself. All right. And when I do that, first thing that we're going to see happen is when I go into the fixed expense item here, I'll end up with the fixed overhead description. Now, there's a little bit that we're still working with. Sometimes the QuickBooks account doesn't always respond quickly to us. And so it's asking us to enter in an amount here, right? So if I entered that in, right, I'm really doing a manual entry just like I did before. Right? If this is what happens, what I encourage you to do, and again, this is a QuickBooks thing, it's not a planning for profit software thing. This field should change to a drop-down arrow. And so what you'll want to do at that point is just simply cancel out of it, enter in a new expense again, right? And we should at that point see this field change to a drop-down arrow, right? If it doesn't, just jump back out of it. It means that, again, your QuickBooks account didn't respond quick enough for the planning for profit software. So when I click on that drop-down arrow, what you're going to see, and I'll blow this up just a little bit more, is you will start to see at that point all your general ledger. This is your list, your chart of accounts from your QuickBooks Online. And so it will look exactly the same. If you use general ledger account numbers, which I recommend in your accounting software, it will show you the GL number along with the description of that particular account. And so we can simply choose them right off of this list. Now, as we go through, right, the nice part is I can choose that item. So I'm going to choose account 56, advertising here, right? What it's going to do is it fills in my description, but then notice all of my monthly data. It went out and it pulled the last 12 months worth of data into your particular model, right? So it's literally, if right now we're in the month of April, it's basically going to take the last 12 months from your QuickBooks data itself. So I can see it's actually bringing in the actual data itself. We've also changed your method to apply cost to manual because we're literally manually entering the data in over here on the right. So the nice part about this is two items, right? If you use the expense category, you can go ahead and choose one of those. We've put a note in here that this data was imported directly from QuickBooks. All I need to do is simply go down to my fixed overhead expense, and I can either choose one of my items off of the drop-down arrow to fill in those, or I can leave it at manual. And in this particular case, again, we said it was 60% in service and 40% in my add-on or replacement. Right, so I'll simply make those choices, and then I go ahead and accept that particular expense. It will now add it to my list. And as I do that, right, we'll bring that back down just a little bit. Again, the expense is there, right? The method to apply is there. The cost, right? Now you notice the cost shows up as 0. And I mentioned that a little bit earlier. I said this would make a little bit more sense later on. Here's the reason why. If you have the method set to manual, well, then it's automatically going to display at 0 in the monthly cost because it doesn't know how much per period because it's changing, right? But we do still give you the full annual amount for that particular expense. And so, again, it makes that process of entering your actual expenses much easier because all you have to do is simply grab it from that drop-down list and you're good to go. Now, when I go in for the next item, right, again, we get our drop-down list there. Again, I can choose the next one. Now, you're not going to enter in every single item on this list. Remember, some of those are already accounted for, right? So, for example, things like you'll have a general ledger item for wages, right? Some of you have wages for indirect wages and direct wages, but wages, and remember, all of your wages are already accounted for back in the labor section, right? You might have some expenses in here, loan amounts, right? Again, you're not going to enter in loan amounts in this section because remember, your profit and loss statement only accounts for the interest on those loans. It doesn't account for any principal payment. You will handle all of your loans in the debt section of the software itself, not in the fixed or variable overhead section. So hope that simplifies it. Again, if you have any questions with this at all, feel free to reach out to us here at Grandy Associates or give our office a call. We'd love to help you out.